Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing ONEOK stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 47 billion market cap. They're trading at $81 a share, and they have 583 million shares outstanding. ONEOK is focused on the natural gas industry. It owns major natural gas liquid systems due to the 2005 acquisition of OKE Industries. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. Free cash flow looks pretty consistent. It jumped way up in 2023 to 2.8 billion, back down to 2 billion in the trailing 12 months. They do pay a pretty hefty dividend, almost 5%. That means they pay out 2.3 billion of free cash flow, which is higher than the trailing 12 months. They may have to trim that dividend or do a better job at generating free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also pretty consistent, peaking in 2023 at 2.7 billion. Revenue is a sales for the company, and that peaked in 2022 at 22 billion. It did come down in 23, then pretty much flat in the trailing 12 months. Midstream stocks did really well in 2022 due to higher oil prices, but they came down in 23, which is why their revenue came down. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 61 billion. We discounted those numbers back to today using a weighted average cost of capital. We get a value of the company at $56 billion. We divide that by 580 million shares. And we get a calculated stock price of 95. They're trading at 81, so they're trading at a 15% discount. It's a buy according to the model. There are 48 companies in the same industry as ONEOK, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend about double the average in CapEx, 1.8 billion. TC Energy spends the most, 5.7 billion. Most of these companies have a lot of debt, including them, but they are better than the median average. Their debt to equity ratio is 1.3. Their dividend is equal to the average, but less than the median. A lot of companies in this industry pay a high dividend. As you can see, north of 7%, some north of 8%. Look at Euronav, almost 11%. They generate lots of free cash flow, 2 billion. They rank 6th in market cap. They probably should be number 5. They're higher than KMI. All their price multiples are worse than the median, but not much worse. But their price to free cash flow is better than the average. They trade at 24 times free cash flow, which means their market cap is 24 times their free cash flow. They generate 18 billion of revenue, a lot more than the median average, and they're still growing. Their 5-year annual revenue growth rate is 8%. Antero is 81%. If you put $10,000 into this company 10 years ago, you'd have $24,000 today. That's a 9% annual return. That's assuming you reinvested the dividends back into this company. If you look in the past 5 years, this company is a pink line, and they're up 17%, their stock price. The price of Brent crude is also up 17%. You can see all these midstream stocks pretty much move with the price of crude. Crude is the red line, which got pretty high. It was out of range, and these 7 stocks I chose were a lot less volatile than crude. They're highly correlated. Let's take a look at their most recent 10Q. This is the first quarter of 2024. Revenue is up. It was 4.5 billion in the first quarter of 2023. Now it's 4.8 billion. Most of their revenue is commodity sales, and that is down from last year. What makes them a midstream company are the services. That's up. It was under 400 million. Now it's 850 million. Because the services for a midstream company are to move and store oil. Here's a further breakdown of their revenue of the 4.8 billion. 3.6 billion is liquids commodities, 400 million is residue natural gas, 157 million is gathering processing, and 664 million is transportation. On the sales part, they don't make much money, very little margin. All their profit is made on the gathering and transportation part. Let's go back to the income statement. Below revenue are their expenses. So cost of sales, 2.9 billion. And their revenue was 3.9 billion. Maybe their margins aren't that bad. We looked at other midstream companies and it didn't seem like they made much money on commodity sales. Operations and maintenance, $500 million, depreciation, $250 million, operating income, a little under $1.1 billion. Last year it was $1.5 billion. And the only reason it was better last year was this big gain of $780 million. I can't find much information on this gain, but I think it's a sale of an asset. Equity earnings is when they make money from investing in other companies. Net income $639 million, last year $1 billion, so their EPS 109, a lot less than last year. And they're adding a lot of shares. It was 448 million last year, now it's 584 million. They probably made a big acquisition. And they talk about it right here. In September 2023, they completed the Magellan acquisition. Of course, the Magellan acquisition, I forgot about that. I remember talking about it when it happened, but it slipped my mind when I made this video. Each unit of Magellan was exchanged for 0.667 shares of ONEOK common stock, which cost this company $14.1 billion. 135 million shares were issued. That's why their shares went up so much. This is not an MLP. If it was an MLP, it would say units, but they say shares. So this is just a regular stock. Let's take a look at their balance sheet. Current assets $3 billion. Current liabilities $4.2 billion. This seems to be a trend with midstream companies having a current ratio below 1. I guess it's okay when you bring in so much cash. Their biggest asset is PP&E, $39 billion minus $6 billion of depreciation, so their book value is $33 billion. Total assets $44 billion, $5 billion of goodwill. Goodwill is the premium you pay when you acquire another company. Their biggest liability is long-term debt, $20 billion. Assets minus liabilities equals equity, $16 billion of equity. They raised $16 billion from selling stock, from selling their business. They profited $900 million from running their business. Retained earnings is the sum of all their prior net incomes minus the sum of the dividends they paid out. And it looks like they buy back stock. They bought back $663 million of their own stock. Let's take a look at the statement of cash flows. The first section is operating cash flow. That was cut in half. It was $1.2 billion last year. Now it's $600 million. In their investing section, it shows you CapEx spend when they invest in infrastructure like pipelines, $500 million. Last year was $300 million. $92 million in the purchase of other companies. In their financing section, you can see the dividends, $578 million. Also the debt, they added $320 million of debt. Let's take a look at the company on Simply Wall Street. Its last price, $48 billion market cap, up 3% in the past week, up a whopping 41% in the past year. Let's see what they say about the company. ONEOK engages in the gathering, processing, fractionation, storage, transportation, and marketing of natural gas liquids, all in the United States. It operates through 4 segments: natural gas gathering and processing, natural gas liquids, natural gas pipelines, and refined products and crude. They were founded a long time ago in 1906, headquartered in Tulsa, Oklahoma. Here's their stock price since they started trading in 1990. This is stock split adjusted. It was as low as $3 a share, and it had a really nice run up to 26 by 2007, down to $10 in 2009. And then look at this run up from 2009 to 2014, 71. Then the oil crash in 2015, down to 25. Right before COVID, it broke through 70. And then in March 2020, down to 20. But look how well it's done since that point. It hit its all-time high. Now it's trading north of $80. Simply Wall Street's valuation is 105. They say the stock is 21% undervalued. 18 analysts priced this stock at 84, pretty much where they're trading at right now. Their revenue forecast for 2026 is $26 billion. That's easy to remember. And their free cash flow forecast is $4.3 billion. And that's by 5 analysts, so they expect a lot of growth with this company. Their revenue back in 2013 was $12 billion. It got pretty low in 2020, $8.5 billion. And then it almost tripled to $23 billion. It's come down a little bit, but still a lot higher than pre-2020 levels. Here's their debt and equity since 2013. They moved together, but their debt is always higher than their equity. Currently, debt of $22 billion, equity of $16 billion. And this green line is their cash. Pretty much no cash on their balance sheet, $65 million. Their dividend back in 2014 was only 3.5%. It got to over 13% in 2020. The forecast is 5% by 2026. The CEO's salary went from $400,000, currently over $800,000. My salary hasn't doubled in 2 years, has yours? And his total compensation, $9.5 million, tenure as CEO, 3 years. 70% of the company is owned by institutions and 30% by the general public. Their biggest shareholder is Vanguard, 12%. Vanguard has $7 trillion of assets under management. BlackRock is even bigger. They have $9 trillion of assets under management, and they own 9% of this company. I did say trillion, not billion. State Street, with a paltry $4 trillion of assets under management, owns 6% of this company. Schwab has $7 trillion. They own 3% of this company. GEO with $1.1 trillion. They own 2%. UBS, Tortoise, Morgan Stanley, BNY, Invesco, Janus, Goldman, lots of big companies. Amundi, the large French asset manager. TIA Cref. And look how much the employee count went up from 2,000 to 4,800. That's due to the Magellan acquisition. And the ticker trades on the New York Stock Exchange, Deutsche Börse, Zicha, London Stock Exchange, Euro TLX, Wiener Börse, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.